Good morning, friends. Welcome to Ecoholics YouTube channel. Friends, my name is Avinash Agarwal, and in this video, I'll be discussing with you important current affairs from 18th May 2024. I have two very important articles to discuss with you. One is going to talk about India's saving rate trend, and the other is going to talk about free trade agreement with European Economic Union led by Russia. So the point is that both these articles are talking about two very different topics. So saving rate is an important indicator of what is happening in our macroeconomy, and we have already had discussion on this in one of our previous lectures, where we said that a declining savings rate in, let us say, financial assets is not a very big problem, because we are simultaneously seeing an increase in physical asset creation by households. So I don't know whether you all have gone through that lecture or not, but if you haven't, please then just have a look at it. And in this article, I'm going to discuss with you a slightly different point of view, where I'm going to show to you that the declining savings rate in India can actually be a cause of concern, and why. In the second article that I'll be discussing with you, it's a small article. It provides you some information regarding India's stance on free trade agreements, and it tells you what we are planning to do so far as signing a free trade agreement with Russia and old Soviet countries is concerned. So let us start our discussion. I hope I'm audible. I'm sorry I did not start the lecture at 7:30 a.m. in the morning, because it took me some time to, ingest this particular article, bring it into a proper shape such that I could discuss it with you guys meaningfully, right? Which is why I couldn't start at 7:30. But if you're watching live, I would typically start sessions at 7:30 a.m. in the morning, right? That would be the usual time going ahead. Today is an anomaly. So let us start with our discussion. I'll be presenting a lot of data in front of you first and foremost, right? I want to make you familiar with certain graphs, with certain tables before I move ahead, right? So let us first look at this figure 1A over here, right? This figure 1A is showing to you the trend of gross domestic saving as a percentage of our nominal GDP, right? And it is also showing you the trend of gross domestic savings as a percentage of gross national disposable income, that is GDNI, right? So whether you look at the blue trend or the red trend, that is gross domestic savings as a percentage of GDP or gross domestic savings as a percentage of gross disposable national income, you can see that between 2011-12 and 2022-23, the trend has been fluctuating but broadly decreasing trend. That the gross domestic savings as a percentage of nominal GDP has come down. Another graph is figure 1B over here, where you are being shown household savings as a percentage of GDP, right? And household savings as a percentage of GDNI. So over here on the left hand side, you are seeing gross domestic savings, and over here on the right hand side, you are seeing household savings. I hope that you are understanding the difference. Savings can be done by all economic agents in an economy. It can be done by households, it can be done by firms, it can be done by government, it can be done by everybody, right? Household savings is a very important component of savings. Typically 60 to 65% of total savings in India are being generated by households. So they are the ones who are doing the heavy lifting. So on the left hand side, I have shown to you that gross domestic savings as a percentage of GDP has come down, as a percentage of GDNI has come down. And on the right hand side, I am showing to you that household savings as a percentage of GDP as a percentage of GDNI has also broadly come down. This article has been written by Partha Ray and Professor Partha Pratim Pal. Professor Partha Pratim Pal is very special for me. He was my teacher at IIM Calcutta. He used to teach us economics, right? So I used to have great time in his sessions, and this article for me is basically, basically a remnant of that time that I have had in his classes discussing with him, right? This next graph over here, it is showing to you household savings as a share of gross savings, right? And as I said to you that household savings are the most important component of our total savings in our country. So you can see that we were at 68% in 2011-12. It has been fluctuating but broadly decreasing, right? we are at 60.90 in 22-23, with 2021 being an anomaly year. 2021 was the year in which pandemic lockdown, severest lockdown, etc. was implemented, and a lot of us were staying at home, right? And household savings as a percentage of GDP, right? Now, household savings has multiple components, right? Financial savings is a component of household savings. Uske baad, your physical assets is a component of your household saving. Savings in the form of gold and silver ornaments is a part of household savings. Households also have financial liabilities that need to be accounted for, right? And after that, what you get is net financial savings of households. Net financial savings means my total financial savings minus my liabilities, or assets minus liabilities, basically. Okay. So these are the terms that you have to be familiar with. This is a dense article. It is an important article, but it's a dense article. Okay. So naturally, there is going to be an element of, academic rigor involved over here. So if there is any doubt you have so far, please ask. Otherwise, I will move ahead to open up this article for you. So if there is any doubt, you can please feel free to ask. I just need 1 second. I just realized that the text in this article, the font size in this article is not, good enough for you to be able to read, right? So I'm going to make some changes and you will be able to read the text as well. So I need just 1 second to be able to make these changes. Just give me 1 second. In the meanwhile, if there is any questions that you all have, you all can ask. And I would like to remind everybody that you can download the PDFs from our app, from the Ecoholics app. If you have not registered, you can do a quick free registration, right? And what you can do is that once this registration has been done, okay, once this registration has been done, just hold on for 1 second. Right. So I believe that now the article that I'm presenting to you, the document that I'm presenting to you is readable. Right, Rashmi? Everybody else? I hope that this document is readable, I'm sure. Chalo. So let us read. Let us understand what's happening over here. So you have to realize that the debate that is being done is that is there something wrong with the trend in Indian savings? And this is the question that your examiner will ask you. That we are one of the fastest growing big economies and the trend in savings rate is non-increasing, right? You can call it decreasing, you can call it non-increasing, and you will be asked to explain this, you will be asked to justify this, you will be asked to analyze this, you will be asked to examine this, you will be asked the consequences of this, right? If you torture the data long enough, it will confess to anything. Is a quote by Ronald Coase, Nobel laureate in economics. Yet we need to look at the data, and the data is something that I've already presented to you, right? I'll keep coming back to these graphs and you will be able to understand them well enough, right? Now, if you, all this data is coming from official national account statistics, so this is not anybody's opinion, this is fact. India's gross domestic savings as a percentage of GDP at current market prices, meaning nominal GDP, so that has come down, right? It has come down from 34% to a little above 30% in 22-23. You need to note down this. This is very important for you. You need to note down this because unless and until you are able to cite this in the examination, there is no point. So please make a note of this particular statistic, right? There is a downward trend in the household sector savings as well. So this is exactly what we have discussed with you in these two graphs over here. That the gross domestic saving as a percentage of GDP is coming down. Household sector saving as a percentage of GDP is coming down, right? So I've discussed this with you. Okay. Another trend, another important statistic that you will note down is this one, that households savings rate, they have come down from 23.6% to 18.42%. Again, this is very important for you. If you are not able to quote relevant statistics in the examination, you are not good enough, right? Now, the point is that how do we solve this riddle? That there is this downward trend in saving ratios that is happening. How do we solve this riddle, right? And another riddle that we need to solve is that we are having a declining trend in savings ratio and an increasing trend in the growth rate. So how is it that both these things are happening simultaneously? One possible answer could be that our capital is becoming more and more productive. That with lower increments of capital or with lesser savings means that a lesser increase in capital and yet a higher growth rate is possible, maybe because that lesser capital increment that we are giving to the economy, that capital that we are giving is suddenly more productive, it is suddenly more efficient. So is it that we are becoming more and more efficient over the years so that we can grow higher with a lower savings rate? We don't know. We are not conclusively saying this, we are asking questions. These are the right questions to ask. That your savings rate is declining but the growth rate is at a good rate. So does that mean that capital is suddenly becoming more productive, more efficient in India? We don't know, right? So as I have explained to you in figure 2, this is figure 2 over here, right? That household savings, they are comprising of the lion's share in our total gross savings in India or gross savings in India. Roughly around 68% in 2011-12 and 61% in 22-23. That is what is getting reiterated over here. That household sector, it constitutes the lion's share of households of gross savings, right? Now let us break down household savings and let us look at the individual components. First important component is net household financial savings, right? You need to understand this term very, very well. Net household financial savings. What does this mean? It basically means the changes in financial assets minus your financial liabilities. That is your net household financial savings. Financial assets minus financial liabilities is your net household financial savings. That has come down from 7.26% to 5.26%, right? If I take a little longer term view, right? Right? So you can see over here that 7.9% to 5.26% is the decline over this long term period, a little long term period. And if I'm taking this short term period, then also there is a decline over here, right? Then also there is a decline over here. Okay. So net financial savings of household sector is clear to you. And I want you to be able to note down this particular statistic as well. Whatever I'm highlighting in yellow is something that you all will note down on a regular basis. There should not be any let up in that, right? And you will create a diary out of the statistics that I highlight in this lecture for you. And in that diary, you will enter only data points and nothing else. You can try to categorize that data point as per your syllabus. That would be great on your part. But you will have to note down whatever I am highlighting in yellow. You don't have a choice, right? If you are preparing for any examination, keep that in mind, right? So the idea being that our net household financial savings are declining. Why is it declining? Because our financial liabilities are increasing. They have increased dramatically from 3.81% to 5.78%. Now RBI says that this is probably not a thing to be worried about. Why? Because if your financial liabilities are increasing, where is the money going? What is it that you are borrowing for? So RBI says that it is for financing fixed assets and investments. So this is absolutely fine, not a problem. We are not challenging this particular conclusion. We are just stating the facts over here that the net household financial savings in the country has been declining, and this decline has been happening at a time when we are witnessing high inflation and high interest rates, right? But there is another reality, right? And that reality is that we are saying that liabilities are increasing, right? So asset creation is also increasing, right? That is what we are saying. But if you see, there is a decline in the net financial savings which we have established, right? Which we have already established this right now, that there is a decline in the net financial savings of the households. But if you see the increase in the savings in physical assets, if you see the increase in the savings in the form of gold, right, it is not enough to offset the decline in the net financial savings, right? So savings in physical assets, they went up from 10.76 to 12.93, right? So let us say roughly 2.2 percentage point increase over here, right? Uske baad what you see also is that your savings in gold and silver increased from 0.2% to 0.24%, right? So 2.2% over here, let us say, another 0.4% over here, let us say, right? But the net financial savings of the households, they declined from 11.73% to 5.26% in the same period, which is a decline of roughly 6%, right? So I can over here I can appreciate that yes, there is a 2.6% increase in my savings in physical assets in gold, but there is a nearly 6% decline in my net financial savings of the households, right? So this idea that the decrease in net financial savings is something that we don't need to be worried about because there is a rise in other kinds of savings, maybe we need to examine this a little more. Maybe we need to dig deep into this a little more. That is something that you have to be very, very clear about, right? So if the examiner ever asks you, right, that what is your opinion about this, right, that this stand that we don't need to be worried about the decline in net financial savings and that there is a concomitant increase in savings in physical assets, in houses, in homes, in gold, etc. So then this data point is something that you will have to marshal, because without data you cannot have any opinion, because without data your opinion is meaningless, right? So that data over there becomes slightly important for you, right? Apart from that, there are few more things. These are not so strongly relevant to our discussion, right? What is relevant to our discussion is there is plurality of opinion upon these data points. So one set of commentators, they believe that this sharp decline in saving rate is a matter of grave concern for India, right? And another set of commentators believe that there has been a substitution, that we are moving away from financial savings into physical savings, right? So we don't need to be worried too much. And then there is another set of commentators who have looked at the aggregate numbers, forget about the percentage of GDP, etc. They are looking at aggregate numbers and they are saying that on an aggregate basis household savings have increased, right? And then there is another problem over here. The other problem is that we are looking at gross numbers on a nominal basis. So we don't have a clear picture on a real basis, right? That on, let us say, if we compare the real purchasing power of those savings and we compare it with the real GDP, how that would come out, we don't know. So we don't know a lot of things, right? But we do know one thing. In economics, we do know one thing, and that is what theory tells us. So what does theory tells us about savings? So theory tells us that in the short run, savings is basically a leakage from the aggregate effective demand that can be generated. The potential demand that can be generated is how I understand. Because if I am saving, that means I am refusing to spend. If I am refusing to spend, that means that there is a leakage from demand. So given the fact that India is a demand constrained economy, and in I think yesterday's lecture itself I have used this term that India is a demand constrained economy. If you look at India's core inflation, it is around 3%. That clearly indicates a demand deficit, right? And that is again something which Partha Ray and Dr. Parthapratim Pal are highlighting in this article, that in a demand constrained economy, when you save in the short term, it can result into a lower GDP growth rate or a lower this thing, because you are not spending. But that is in the short term. Theory also tells us that in the long term, these savings, they become available for investments, and those investments can help us in creating infrastructure and the ecosystem which is required to be able to pursue a higher growth rate, right? So given the fact that we are a capital scarce, labor surplus country, a higher rate of savings is imperative for sustained long-term growth. This is what clearly theory tells us. There is no ifs and buts over there, right? And again, theoretically, what my conclusion is that, boss, India's saving rates, they need to be further higher. We can compare ourselves clearly with China, and we can see that the gross savings as a percentage of nominal GDP in China is higher. if you see the contribution of households in that savings, that is significant. And if we see the deployment that China has done, the way they have converted those savings into investments, right? So the investment as a percentage of GDP that they have been able to hold high at above 40%, closer to 45% in many years. If that is the template that other countries need to follow to be able to create a chance for that kind of growth, then we need a higher savings rate than what we are presently having. There are no ifs and buts about that, right? So the point that you can take out over here from this article is that yes, there is an overall negative trend that needs to be investigated. Is it because of the changed behavior post pandemic? Is it because that genuinely people don't have sufficient income, therefore not sufficient savings, and therefore savings rate are coming down? We need to explore that as policymakers, as statisticians, right? We don't know all the answers, but one thing that we know for sure is that high domestic saving rate will be essential ingredient for high economic growth, and there are no ifs and buts around this. So this is my submission for this first article. I would like to move to the second article and talk about the Eurasian Economic Union FTA talks that India is starting, right? So Eurasian Economic Union is basically a Russia-led grouping. It consists of Russia, Armenia, Belarus, Kazakhstan and Kyrgyzstan, right? So basically all these states are basically post-Soviet states. They were all a part of USSR, right? Russia is increasingly looking eastward. Russia is strengthening ties with China. Russia is looking to strengthen ties with India because of the kind of sanctions that have been imposed upon Russia post Russia's invasion of Ukraine, right? So Russia is very interested in signing a free trade agreement with us. We are very interested in signing a free trade agreement, not just with Russia, but almost all major economies except for China. So we are into negotiations which are likely to be concluded in 2024, 2025, and this FTA talks is one of those negotiations that we are doing, right? So there is a lot of willingness from both sides to get this done, right? As I said to you that Russia is facing sanctions. Russia's banks, they have been banned from the SWIFT network, right? So increasingly Russia is resorting to usage of local currencies or domestic currencies of trading partners to be able to settle its trade dues one way or the other, right? And right now if you see the trade between India and Russia, it is skewed in favor of Russia, and this is something that we really need to correct, right? I mean, just imagine this, okay, that in the last year we had exported $3.15 billion and imported $46.21 billion worth of stuff, let's say. So 46.21 minus 3.15, that is telling you that our trade deficit vis-a-vis Russia last year was around $43 billion. Look at what is happening today. In FY24, we have exported roughly $4 billion and imported $61 billion. So our trade deficit is standing at $57 billion. So there is a significant shot up that we are seeing over here in our deficit vis-a-vis Russia. What is it that we are importing from Russia? Crude oil, petroleum products, coal, fertilizer, vegetable oil, pearls, iron and steel, newsprint. What are we exporting? Pharma and drug, iron and steel, minerals, marine products, telecom, instruments and electronic machinery, right? Now this is vis-a-vis Russia. In general, what is our stance? And that is something that you need to be aware of. So FTAs is emerging as an important trade promotion tool for India. I'm highlighting this. I want you to note this down as it is, right? Many times students ask me that how are they supposed to quote reports or how are they supposed to quote numbers in their answers. This is exactly how you are supposed to quote reports or quote bodies or quote numbers in your answers. That as per so and so following is happening. As per so and so following is happening. That is how you are supposed to be able to cite things, right? Another very important data point that is coming out is that we are having a very advanced levels of discussions with UK, Oman, US, EU, Switzerland, Norway, Russia, Sri Lanka and Peru, right, in terms of negotiating FTA, right? And we intend concluding a lot of these FTAs. So except for China, we are in talks with all the major economies, right? And given the fact that Russia is turning eastwards, there is significant fresh opportunities, permanent opportunities there, and that is something that we want to harvest, right? So this is my submission to you today, guys. I have discussed one extremely elaborate, almost an essay-like article on India's savings rate, and I have highlighted certain important numbers that you need to take out of this PDF, and this PDF is available on the Ecoholics app. So that is something that you can do, right? If there is anything that anybody would like to ask or say, please feel free to do that now before I close the lecture. We'll meet again mostly on so Monday and Tuesday I'm traveling to Chennai, right? So I just remembered that, thankfully. So Monday I will not be able to take this morning lecture. Tuesday I should be able to take, right? Because from there I think mostly I should be able to take. So I'll get the lecture scheduled, right? And if I can take it on Tuesday, I'll take it on Tuesday. Otherwise, I will definitely take it on Wednesday. And whatever, let us say, leftover is there in terms of important articles not discussed with you, I will cover that over the coming week. But because of certain engagements, I have to travel to Chennai on Monday and Tuesday. So if any of my viewers are from Chennai and you would like to meet me, you all can always try to get in touch. You all can probably drop a mail to Ecoholics and they will connect you with me, right? And probably we can meet up in Chennai, right? So that's just a wild thought. So having said that, I'll bring this lecture to an end over here. Thank you so much for joining in. Sorry I was a little late today, right? And we will keep meeting, keep discussing. Until then, thank you so much. All the very best and Jai Hind to all of you guys. Take care. Bye bye.